Thank you for visiting our website. I'm Emily Blaylock, and I'm the Chief Lending Officer here at Northwest Bank and Trust. And I also oversee our Economic Development Division. We believe strongly that economic development really drives community growth. And so we have also developed a product that deals just in the incentives around economic development. What is TIF, or Tax Increment Financing? Well, it actually happens as far as early in negotiations of planning for a feasible project. So if you're the developer and you are wanting to build, a mixed use project, for example, and you enter into negotiations with the city, you've approached the city to say, I like this piece of parcel and I want to build something on it. The city looks at your pro forma and you crunch numbers as well as the developer, and you find out, oh man, there's so many costs here that need to happen. The area is in a slum and blight area. The building may need to be rehabbed if you're purchasing an existing building. The land may have environmental issues, so on and so forth. There's lots of infrastructure that needs to be done to take care of the site to make that building feasible. So costs come into play, and oftentimes there is negotiations of a but for. I can't do the project except if I need incentives to help me out, help out the developer with cash flow issues, and help get the infrastructure in place for the city. When those are negotiated, then the project can move forward and they have incentives tied to it. Oftentimes what we're going to talk about is the rebates that are applied back to the project in a pay-as-you-go structure related to the property taxes being paid by the developer each year. So a development agreement is drafted up, and that's a legal document between the city and the developer that states all the parameters that need to be done for this project to take place. If that happens, the rebate will be paid out over time, a pay-as-you-go, as I mentioned earlier. The developer is happy because he gets a rebate back on his property taxes in each year. And the city wins because they get their project done. But let's talk about how Northwest Bank can then enhance that benefit of the incentive. So we look at that development agreement as well, and we review it with our legal partner. And basically, we can look at those as future cash flows happening over that project. And so when those future cash flows have value, we apply our net present value factor and are able to lend an amount up front to the developer. This saves the developer as putting in additional cash to his project. So he gets equity in the project and the project can be done. So how do the calculations happen with the city on the incentive of the actual increment payment? Remember the definition, tax increment financing. So what does increment mean? Increment is when you take the base value of that project, and the base value is, what is that land or existing building worth today? What's the value on it today? What taxes are being paid on that, if any, on that piece? And then when the developer is going to decide on what type of project they are going to build, there's actual future value there of that building. So what is the future value of that building that he's going to build? And the difference between the base value of the existing tax gives us the increment, that number in between the base value and the future value of the project. So those taxes that are being paid on the base value now are much higher at the future value of that project that will be built. That is the increment payment, and then that is thus the rebate that the city is willing to negotiate with the developer to give back perhaps on an annual basis and structure it in their pay-as-you-go structure. So let's walk through an example of an actual TIF project. So in a few years back, we actually had the city approach us about a project that they were trying to get done. And the one piece left, there was an additional cost that had incurred on the construction side for the actual developer. And the project was kind of in limbo of, can we move forward or can we not? The lenders were all getting at the table. The project was ready to close except for additional costs, and the gap was large to get the deal finished. So we looked at that project and found that there were incentives in the development agreement, and the incentives tied back to the property taxes that were going to be paid. So there's future increment generated from the project, and thus we were able to capitalize and make that loan based on the future increment payments. That loan went in as equity to the developer, and the developer was able to shore up all the capital uses for the project and close the deal. So the city won. They got their rehab of an existing site. The borrower was able to have gap equity at the table and got a higher return of investment. And we were able to help fuel economic growth. If you want to learn more about how we can come to the table and help with your project, then please contact one of our TIF lenders.